I thought sneaky might have been a clue, Greg, that it's a sneaker company, but it's Sherwin-Williams, isn't it? Welcome.
It's Sherwin-Williams, and we think it was a good name before, but still is for momentum into 2025.
And is there a political kind of rationale for that, or just positioning?
Sherwin's been in our top five now for over a year, but I think the added kicker is that we finally have some potential bottoming of the home improvement market. And if they just get some volume growth on that into next year, and just like your prior guest talking about the housing market, anything to sort of prime the pump and bring the supply side back, I think would be great for the whole home improvement market, but particularly Sherwin-Williams, given there are a lot of smaller ticket projects.
Although he was also concerned that we could see labor constraints continue to be a headwind on additional supply.
It's always a risk, but I guess the net of it is that we know that demand hasn't been good in home improvement. And so to us, the point is that if it can just get better from here, we have housing churn at a 40-year low as a percentage of the housing stock. So we think as that just starts to bottom and improve, there should be upside across many of the names, particularly Sherwin.
Yeah, and obviously a lot of investors are waiting for that moment to kind of jump in if we are seeing a bottoming in that trade. And you say maybe even look at a Wayfair. I mean, as a beta play, especially if rates moderate, because they would seem to have a lot of exposure to Chinese tariffs, or no?
They do have some Chinese tariff risk. I mean, I would say, tariffs, we think on a static analysis is about a 6-7% hit to retail earnings if they can't pass it all through and mitigate. Wayfair would certainly be exposed to that. But I think you also have to look about the whole package. If we look at Trump 1.0 and compare it to what 2.0 looks like, there were tax cuts involved. If there's a limitation or a rise of the SALT exemption, all these things could prime the pump and add to the supply side that, frankly, if you look at Trump 1.0 actually ended up accelerating retail earnings growth.
It did. Can you unpack that, especially when you say that tariffs would only would hit retail earnings in aggregate 6 to 7%? Would that even be with a 60% tariff?
That's on our analysis, an incremental 35% on China and China alone.
Okay,
that's the dollar math.
So 6 to 7% is not a huge number, even if there is a tariff that high, which would be considerable. What did happen under Trump 1.0?
Well, raising the retail earnings, so if you look across our 28 leading broadline, hardline retailers, averages usually 10, 11% growth. And then we saw that accelerate to 23% growth as an effect of the corporate tax and individual tax cuts. So you had almost a doubling of the growth rate of retail. Then you had that pull back in 2019 when the tariffs took effect. So you could say by putting the supply side effect in place first, you boosted up the company's ability to reinvest. And they could basically not pass through all of the hikes and costs from tariffs. And so the net effect over a 2-year period was actually retail earnings growth accelerating from 10 or 12% to about 17, 18% over those couple of years.
That's huge.
Again, it was key to do the supply side first before the increased pressure from the tariffs.
And I'm sorry, did you say tax cuts were a big reason for that?
Yeah,
both the
corporate tax cuts and the individual.
We wouldn't have, look, we're not going to have corporate tax go down anymore, would we, under this administration? And in personal, kind of the best case scenario is status quo, right?
Well, I think we're piecing through different tweets and things that have gone along over the last couple of months. I guess what I would say is 15% has been floated as a corporate tax rate. Whether you ever get there or not, who knows? Is there some sort of subsidy for hiring American workers that could be part of that? The SALT, I know that was one thing that had been talked about on the campaign trail, maybe raising the limit on that. That would be, I would put that in the supply side camp of, could that help free up the housing market? I mean, one example, I think just a few years ago, we had a bipartisan agreement on sending out checks for $2,000 or more for people to stay home, right? And not add supply. Could we send out checks for thousands of dollars for people to list their house? Because I think in the housing market, one of the big problems is just lack of supply.
Wow. Okay, Greg. Okay, you can get my nominee for Treasury Secretary. Wait a minute. So you think we could potentially offer people like $2,000 to put their home on the market?
Well, we sent more than that for people for not working.
Right.
Just a few years ago.